The market is pumping fast, playing out a short squeeze that perfectly wiped out the liquidity previously building above the price of Bitcoin. The direct catalyst for this is the S&P 500 rallying 7%, driven largely by reports of an Iran ceasefire. Crypto and traditional markets are highly correlated. A massive relief rally in the stock market acts as a heavy tailwind, pulling digital assets higher regardless of their individual network fundamentals. We saw the immediate result of this push. Bitcoin sliced right up to $72,000, wiping out short sellers in a localized squeeze. This leaves you with a choice. Are you buying into the definitive end of the bear market, or stepping right into a short-term trap designed for late buyers? To figure that out, we need to map the short-term resistance zones for Ethereum and Solana, pinpoint the exact signals that prove a macro reversal, and weigh the benefits of holding spot against active leverage. Assuming a temporary, headline-driven bounce is a permanent change in market structure is exactly how long-term capital gets wiped out. Let's look at the risk of buying based strictly on geopolitical news alerts. If the headlines hold up, you might catch the tail end of this S&P 500 bounce and ride a bit more crypto relief in the immediate future. But by jumping in right now, you are buying directly into severe multi-month resistance. If the news cycle turns, the technical rejection will trap your capital at the absolute local top. The alternative is waiting for the charts to prove it. Look for confirmed weekly closes above $76,000 for Bitcoin or $2,400 for Ethereum. Those specific levels give you objective proof, confirming the market transition from a bearish structure into a sustained bullish trend. The cost of this patience is that you have to leave the first 5 to 10% of the rally's upside on the table. You are paying that premium for the certainty that you aren't getting faked out. If you are building a macro spot position, relying on confirmed weekly closes protects your capital much better than chasing daily news hype. If you are looking at shorter-term moves instead, we need to focus on Ethereum's current retest of the 2,150 to 2,200 support zone. This chart shows Ethereum reacting to that exact support area, acting as a launchpad toward a target of 2,430. But with the 4-hour RSI currently overbought, expect sharp pullbacks. To survive that volatility, set a hard stop loss just underneath the 2,150 mark. The downside to keeping that leash so tight is that normal market noise might trigger your stop loss. You could be exited from the trade at a small loss right before the price eventually rallies to hit the target. That makes this Ethereum setup a strong range trade, but only if you have the discipline to honor strict invalidation levels on the 4-hour charts. Solana is in a different position. Right now, it is rejecting straight-off heavy resistance at $85. Buying Solana here means taking on immediate pressure. You risk getting stuck in a multi-day cool-off phase, waiting for a breakout that hasn't shown any mathematical proof it will actually happen. A safer approach is to wait for the price to come down to established support levels at $82.50 or even $78. If you apply 10x leverage to these setups, a 10% bounce turns into a 100% gain, but it drastically shrinks your margin for error. In a leverage trade, a minor dip below support causes a total loss of capital, transforming a temporary drawdown into a permanent liquidation. Spot investors don't have to worry about that. If you hold the actual asset, you eliminate liquidation risk completely and can sleep through short-term overbought signals. The trade-off is that your capital might sit stagnant for weeks while the market chops sideways. Leverage is a high-precision tool meant for scalping tight ranges. It has absolutely no place in a long-term investment strategy. The market is cooling down from an overbought, news-driven peak, and it is now confronting major resistance levels set by traditional finance. A geopolitical ceasefire is a strong micro-catalyst, but it doesn't equal a structural weekly trend reversal. Decide your next move by locking in your time horizon and risk tolerance. Active optimizers focus short-term on the Ethereum $2,200 retest and Solana's $82.50 support, using strict stop losses. Passive holders wait patiently. Avoid heavy resistance until Bitcoin closes weekly above $76,000. You will miss the absolute bottom by waiting. That is the price you pay to buy into confirmed structural momentum instead of hope. Navigate these zones by picking one strategy and refusing to deviate. Keeping high leverage tactics out of a long-term spot portfolio prevents a single short-term error from ruining a multi-year plan.